What's good, traders? Welcome to another episode on the trades we missed last week. And if you're just joining us on this episode, this is where we do our this is where we analyze Gbpusd as our main forex pair. So here on last Monday we had a bullish trade here. So you can see this bullish setup here coming from a fair value gap right here. So at this fair value gap was created by the price actually. So you can see that price comes back to that fair value gap to bounce off from it. So from here we can see that price is actually still moving bearish. So we can see that price is actually still moving bullish. So as price comes to tap this bullish fair value gap, you can see a break of market structure here. See how price broke above this previous high, giving us a reason to enter at any given fair value gap that might be created here. So we have a fair value gap that's being formed here and also here. See, price comes back here, so we'll set our entry at this spot here. But as you can see, the price did not even try to come to this area at all to give us a bullish trade right from this fair value gap. But you can see this fair value gap here. This is where price actually bounce from. So we can use this one for the ones that they want to wait. So you can see that price actually tapped their fair value gap here. So you can see how price comes back to tap into this fair value gap, giving us a push to the upside, just like so. Let's see how many risk to reward ratio this got us. So we have our entry at this spot here and our stop loss right below this low here. So this whole space is our risk, and you see where price actually reached. Price reached this spot right here. This is a previous high from our previous trade. You can see price did not reach this area but actually stopped at this fair value gap here. As I've said on previous videos, before price reaches a high or a low, check out for any fair value gap that might be obstructing or hindering that price from reaching that respective high or low. So you can see this fair value gap here. You can use it for your take profit. So you can see how price rally all the way to hit that previous fair value gap, giving this trade a 5.1 risk to reward ratio. So that was the first trade for last Monday. Now on the next trade, that same Monday, we had for ourselves a bullish trade again. Now you can see this price, you can see how price tapped into this fair value gap here. See, this is a fair value gap. Price comes to tap into it and rally to the upside, giving us a break of market structure. So prior to that break of market structure, you can see our newly formed fair value gap here. So you can use this fair value gap and this order block to actually enter this trade. Now we have a long position here at this fair value gap. Our stop loss would be right below that low that created for us that fair value gap. Now the next thing we should look out for is take profit. Where should we stop taking our profits? Now our take profit should be at any previous high, as the case may be. So this might be your take profit here, and this would give you a 2.31 risk to reward ratio, or this one here, this is giving a 2.66, and you can as well use the extreme high for our overall take profit. Now this is giving us a 3.71 risk to reward ratio for our trade number 2, and that was a bullish trade, by the way. So we have our next trade, which is trade number 3, a bearish trade. Now we had a previous trade which was a bullish trade, and you see how price can change at any given time. We had two previous bullish trade. Now we have our third trade on Tuesday, a bearish trade. So we have a fair value gap here. You can see this fair value gap at this spot. Let me use this demonstration tool here. So we have a fair value gap here. Price comes to tap into this fair value gap. Now you see how price comes to tap into this fair value gap, rally to the downside, and on that same time frame, which is our 3-minute time frame here, you can see a break of that previous low, a break of market structure. The next one is our newly formed fair value gap here. This is where we would take our entry. We have first fair value gap, break of market structure. Now the next fair value gap would be our deal entry. Now this is our short position here. We put our position here, ready to take your trade, and we have a stop loss here. So this stop loss is where we would put our this previous high is where we put our stop loss. So this whole space is our risk, and let's see how we are going to take this profit. So the profit should be at the previous low here. This is our take profit here. This is giving us a 3.52 risk to reward ratio. You see how market also rallied all the way to this to take out this previous low here, and this is giving us a 4.76 risk to reward ratio. The next one is our trade number 4. Our trade number 4 changed the whole trend and rallied to the upside. Now we have a fair value gap here, a bullish fair value gap. We have an order block here. If you go to our 1 minute time frame, you can see this is an order block here. So this is a down candle before markets push to the upside. Now we analyze this and use this as our point of interest as price comes back to tap into this area. We would wait for it to create for us a break of market structure. See how price crossed above this previous high and created for us a fair value gap here. See this fair value gap, and you see this order block. This is where we'd wait for market to tap into and push to the upside, giving us a sweet entry for a bullish trade. So we'll put our long position, and our stop loss would be below that low that created for us that fair value gap. Our entry right here, and stop loss here. The next thing is to look for where we would stop taking our profits. Our profits can be looking at the previous high. Now we have a previous high here. This is giving us a 1.69 risk to reward ratio. You can also check to see more. So here we have one here. We have take profits right here. See here, we'll put our take profits. Now we'll take our profit all the way all the way to that 2.95 risk to reward ratio. That is how our risk to reward ratio would be. The next is our trade number 5, and our trade number 5 is, as usual, coming all the way from a fair value gap. The next thing we would look for is a newly formed fair value gap. As you can see, a fair value gap and a fair value gap here. A break of market structure here. There's a break of that market structure here and here to this previous high that candle was taken. So after this one, this candle was taken, we have a retracement and a bounce from this newly formed fair value gap. That's why I'll put this one here. So this is our risk and this is our entry here. So our long position will be like so. At this spot, we put our entry, and then we place our stop loss at this previous low and give us this fair value gap. The next one is our take profits, and this is giving us a 2.55 risk to reward ratio. And let's check to look to see. Okay, I don't think we have a reason for our take profit here, but there's a high here. At this high, I'm guessing price should give us that. Okay, price came back. So we have take profit here, 2.55 risk to reward ratio. And the next thing is to look for a newly formed fair value gap and wait for price to tap into it and give us an entry. So we have that same fair value gap that was used here. You see how price comes back to tap from it and push to the upside. You see how market actually created a break of market structure, a break of structure here, and a fair value gap here. This fair value gap and this is our entry here. All these are the liquidity, inducement liquidity, and we have our entry like so here. So this is our trade number 6. This is our trade number 6, giving us a long position, and our stop loss would be at this low that created for us that fair value gap. Our take profit would be at the immediate high here, giving us a 2.52 risk to reward ratio. And you can see how markets rallied all the way to this one here, giving us a 3.58 risk to reward ratio, this previous high here. Next in line is our trade number 7, and our trade number 7 is right around the corner here. This is giving us a so this is giving us a so our trade number 7 goes like this, a bullish trade by the way. So we have a bullish fair value gap here. As price comes back to tap into this bullish fair value gap and all the way into this other block here, price actually rallied all the way from it. That means it's bounced away from this newly formed fair value gap here. So first of all, as usual, our first fair value gap, we must make sure price taps into it, bounces off from it, and give us what a break of market structure. That is said, now we have a fair setup here. So we'll wait for price to tap into it, just like so. Price comes to tap into this fair value gap here, and the next thing is a push to the upside, confirming our entry. And we have a stop loss right below this low here, and our take profits at the previous high. can see our take profits here. Giving us a 2.75 risk to reward ratio. The next on our list is our trade number 8. Our trade number 8 happened to be a clear bullish trade, a point of interest from this fair value gap here. We have a point of interest here, which is our fair value gap. Price comes to tap off from it and created for us a break of market structure, and alongside a fair value gap here. This is where we take our entry. So like so, long position here, our entry at the fair value gap there. The next thing is, for our order block here, we have to be very careful. This is where we put our stop loss and our entry, like so. Our take profit would be at this previous high here, giving us a 1.97 risk to reward ratio, but that seems very little for our risk to reward. That seems very low for our risk to reward ratio. Now we can also put it here. This is also a swing high that we can use for our trade, and this is giving us a 5.03 risk to reward ratio. And that was our trade number 5, which happens to be a bullish trade. Now we have a bearish trade for our trade number 9. As usual, it's coming from a fair value gap here. This is a fair value gap here. You can see this is a fair value gap here, and you can see another fair value gap here. So we have one fair value gap here. Let me show you very clear. You have a fair value gap. Price comes down all the way to these spots. On a 5-minute time period, this is another fair value gap here. So let me show you how this fair value gap is formed. So after price taps this fair value gap, rallies to the downside, now created for us another fair value gap here. This is a fair value gap here. So we'll use all these candles all the way to the order block, and this is order block here. At the height of this candle is where we'll put our stop loss. So let's drag it all the way to these spots, and to be on the safe side, our short position would be like so. Our entry at the start of this fair value gap, and our stop loss, and our stop loss would be at this previous high here. The next thing is our take profit. Our take profit would be at a previous low right here, since we don't have any fair value gap hindering the price move. So we have our take profit giving us a 3.94 risk to reward ratio for our take profit, and that was our trade number 9. Our trade number 10 is right here. Now we have a fair value gap. As usual, these are fair value gap. Price taps off from it, comes down, gives us another fair value gap here, and prior to that we have a break of market structure here. See how price comes down, then breaks the previous low and give us a fair value gap, and this is where we'll put our stop loss right here. So let's go short position, our entry here at the start of this fair value gap. So immediately price comes back to tap this fair value gap, you enter and price goes down below it. So the next one is our stop loss right above this high. Our stop loss is right above this high. Our take profit to be at any given low. So we can use this for our take profits. This is giving us a 3.41 risk to reward ratio for our trade number 10. And on to the next one is our trade number 11. Okay, we have it here. We have our trade number 11 giving us a bullish trade. We have a fair value gap here. As we all know, we have a fair value gap here. Price taps off from it, bounces to the upside, and what do we have? We have another fair value gap here. And before that, we have a break of market structure. You see how price breaks and even closes above this previous high here. So we have that break of market structure here and a newly formed fair value gap, which would be our entry. Now this is as it's going to be a long position here. So we can use the center of this fair value gap, which is called a something encroachment. So this is it. Stop loss would be below this low, and our entry just at this fair value gap. Our take profits would be at this one here. So this is where our take profits would be, giving us a 2.05 risk to reward ratio, and that was the first take profits. You see, you can also use this take profits to this previous high here can also be your TP, and this is giving us a 4.52 risk to reward ratio for this trade. You can see it. Boom, we have our trade here. So the next one is the last but not the least, trade number 12. So as usual, first things first, a fair value gap here. You have a fair value gap here. Price comes to tap it, bounces off from it, and created for us a newly formed fair value gap at this spot. Now let me show you clear. We have a break of market structure here. See how price breaks this low, and after tapping into this fair value gap, breaks this low, and the next thing is a fair value gap here. So this fair value gap is where we actually take our entry for a short position. We have it here like so. Our stop loss is right above this previous high that created for us that fair value gap. The next thing is our take profit, and our take profit would be at this previous low here, giving us a 3.85 risk to reward ratio, and that was the last trade for the week. So guys, let's stay tuned and see you guys on the next episode on the trades we missed last week. And if you're just joining us, you can as well like, share and subscribe to this channel, the Ultra FX. Peace.